Hey there, it's Mark Gig, I just want to talk to you real quick. If you've been watching me on this channel, you know that I buy a stock where I buy a base position and I sell calls against it. We sell calls for income. That's how I can make the money, whether the stock goes up or down. It's the juice. I call the juice the income. The income is also the time premium, not the whole premium of the option, but what's called the time premium, how much the option price is. And we collect that price. Okay. That comes into our account because we're sellers. So what we do is we buy the stock. Forget about that for now. And then we go out and we find a schmo, somebody that's a big gambler that's trying to make a bunch of money with a little bit invested. That's the option buyer. They buy an option from us. We sell an option. That means we get money from the option buyer. What they're doing is they're basically buying the right, but not the obligation, to buy the stock from us at a certain price before a certain date. That's all that is. It's an option. It's an agreement between two people. The seller, we are obligated if the option buyer says, "Hey, I want your stock at that price that we agreed to." Obviously, and that stock price has to be, the current stock price has to be higher than the one we agreed to. Otherwise, it's not really worth anything. And so, what we're going for is the value of that option, not the in the money amount, the intrinsic value, but the extrinsic value. That's what we call the juice. If you don't know what I'm talking about, I've got some other videos on this kind of take you through the strategy. But in this video, I'm going to talk about what I'm doing today that's going to make me $45,000 in Tesla. Now, I've got a decent sized account according to most people. This is just my IRA, and I've got one position of Tesla. You can see it on the screen here. It is a position of synthetics, right? So we don't own the shares. We own deep in the money calls to own the shares. Okay, so we have control of these shares. Then what we do is we go out and sell options against it. You can see in this account right now, I've got 45 calls sold against my 320 calls, right? They're 4,500 shares basically, and I got 4,500 shares sold against them. So we sold them for $2,273 per contract. That means we made $102,000 last week when we sold these 400s. Well, the stock has come down and now it's below 400. You can see it at 393.98. So it's below 400. And so we made that full 102,000 less $247 to get out of the position. Here we are right before expiration. So go us. We protected our account, is another way to look at it, by $102,000. That's a pretty significant amount of protection. And by the way, I have a system that says, hey, listen, the probability is for the stock to go down or the probability is for the stock to go up. In my situation, the stock is now fluctuating between going up and going down. And I think it's now moving toward the downside slightly. So I want to protect myself on the downside. I can still do well in my system by protecting through the downside, but capital preservation for me is really key. So let me just show you what I'm doing. So I'm going to buy these options back, okay? And then I'm going to sell next week's options at a different strike price, okay? That's called a roll. I do both transactions in one. I buy back and I sell at the same time. Now, I'm having to do this not live because the market is just about to close and I've had to already do this trade because I made another video, long story. But anyway, bottom line is I'm just trying to I captured on the screen pretty close to what I did, just so you know. So I bought back these 400 calls and let's take a look at what I'm doing next. So I want to look at these 390s. The stock right now is about 393-ish, okay? And so I'm looking at these 390s slightly in the money. Now, the in the money is not what I'm going for as far as income, but the in the money amount, that $3-ish, right? That gives me protection of just $3 to the down. So that's 1%. I'll take it. But really, what we're going for is this juice column, this extrinsic column. And on some of your systems, you might have to configure it to call it time value, like I do on my other systems. This system, Thinkorswim, says extrinsic value. So what does that mean? Well, that means the extrinsic value on the 390s is $1,116 per contract. Okay. I've got 11 contracts. I'm sorry, I got 45 contracts, right? So I've got 4,500 times 11, right? It's about 49 grand. So that's what I'm going to be bringing into the account. Plus, I'm going a little bit in the money. So the total amount that I'm bringing in is this $1,400 per contract. Okay. So that's that amount that I'm bringing in. That's also what I call the cushion amount it protects me to the downside by $14. So this stock can really decline from 393 to 378 or something like that, right? And so that'll protect me to the downside if the stock goes down to 378. I kind of don't care. I just in this for the $1,116 of extrinsic value. Okay. So I'm going to go ahead and buy back my 400s and I'm going to sell and pick up the 390s for next week. And that's how I'm going to sit there. And that should make me about $49,000 worth of juice. Not too shabby, right? Now, there's one more part of this trade that I want to show you. Remember how in the beginning I showed you we had these 320 calls? I now, with the stock coming down, I have an opportunity to take some of my cash and take this and shore it up. I call it fortifying your position. So I've got the March 25s, 320s, still a few months, couple of months left before they expire, and they're 320s. They're still in the money by 80 bucks. But you know what? With a delta of 83, and if you don't know what delta is, it's just the probability that the stock closes above this strike price. That's how I look at it. And so it's got an 83% chance of closing above the 320, but still, I like to have this number a little bit higher. So what I'm going to do is I'm going to sell these 320s and I'm going to move them out and I'm going to move them down. That's fortifying my base position, right? And the reason I can do it is because I've been collecting juice week after week after week. You saw I just collected that 102,000 from the 400s, and that goes into your cash pile when you have to buy it back at whatever you bought it back for, which I just did. Okay. And so now I'm going to go and fortify that position. So here's what I'm going to do. I'm going to look at selling the 320s for March and buying the 300s for May. I'm going to put in a market order. And the next time you see my screen on the next video, you'll see that I've done that. And so I've been able to, on this day where the stock is down just a little bit, not much, but I've been able to collect my juice, which is my income. That's what I'm in this for. And I've been able to fortify my position so that when it goes back up, I've got a nice, strong, fortified, strong delta on the way back up where I can make some money. So that's how I'm doing this Tesla trade. See you on the next video.
Hey, it's Mark Yagi, and if you haven't subscribed to this channel, please do that right now. That would be a great favor to me, and plus it helps me get this material out to a lot of other people that might need it. I've got a little bit of a movement going on here, and I want to try to change the world one person at a time, showing them that you can make safe, reliable income from the stock market. And plus it helps to grow the channel a little bit. Also, if you would give me a thumbs up on the video and like it, great. If you don't like it, give me a thumbs down, that's cool. But just tell me why you don't like it so I can get better. And then hit the notification bell so you can get these videos as soon as they come out, because a lot of times this is timely information and you want to get that information before it gets stale. The last thing is to join my free Insider Tips newsletter. There's a link below and you get everything in one spot. You get breaking news and analysis also. So that would be great if you could do that too. See you soon.